Okay, accounting for managers, section 6. Zeb, would you open us up in prayer, please?
Dear Father, thank you for waking us up this morning. We'd like to ask you to forgive us for all sins. Pray that we have a couple of this class today. Pray that we all learn something new. In Jesus' name, I pray.
Amen. Okay, so I'm going to catch blended up to date. So everybody seems to be having problems with the assignment that I gave because I haven't covered all the materials. So today we're going to do some review and we're going to actually work through the problems, starting with problem 23. Okay?
Now is this S?
This is P,
Oh.
and it starts on page 31.
She's at 26.
Starts on page 31. And this starts with, the problem is calculating income and cost per unit for service company. I actually had this ready to print out and I left it at home. Anyway, went through chapter 1 and I made a list of all the definitions and all the formulas. So that as you're working through the problems, and Jennifer's got a great copy, we're going to get printed out and I will distribute it through Canvas. Okay? So, so that when you're working on problems and you're looking at it, you can say, is it this? And because there's like 10,000 formulas you're going to go through in this class. Okay? So this is calculating income and per cost unit for a service company. Service company has no merchandise. All right? Do you have this copy, Jennifer?
I gotta get the right thing up.
She's not listening to me. Okay, so I'm going to minimize this, and we're going to read the problem. The tree doctors provide tree spraying services in a company's home county. Ivan Peters, the owner, incurred the following operating costs for the month of January 2002. So the first thing you're going to do when you set up your sheet is we're going to put the name of the company and that this is an income statement with the month ending January 31st. And the reason we do this is because then anytime somebody picks this up, they know exactly what they're looking at. There's nothing like picking up a piece of paper that you think's current, but it's 2 years old, to mess up your whole accounting system. So that, okay? Now, the tree doctors earned $28,000 in revenues for the month of January by spraying trees totaling 35,000 feet in height, okay? So the first thing we're going to do is prepare an income statement for the month of January, okay? So, to start the income statement, we're going to put in the sales revenue, which was $28,000. And then it gives us a list of the expenses in the book. Salary and wages are $8,000. Chemicals are $4,400. Says depreciation on truck, depreciation on building and equipment, sale supplies expense, and gasoline and utilities. Okay? This is a service company. So the expense of the depreciation goes on the income statement. If this was a manufacturing company, the building and equipment would be on the statement, but not the vehicle. Okay, so because it's a service company though, this is equipment and normal expenses that are incurred on a monthly basis. So we start with $28,000 in revenue, we add all this in, and then we have a total operating expense of $15,800. So our net operating income is, and I'll show you. So you need a little formula up here. H6, 28,000 minus 815 is $12,200. Okay? So this is the basic income statement. Question?
What's the formula?
Oh, it's sales, total sales minus total operating expense
Sales
equals net operating income.
minus
Revenue minus expense
total
equals income. Okay? Okay, so the second question they ask is that we're going to compute unit operating cost of spraying 1 foot of tree height. Okay? How would we do that? I know it's on there, but how would we do that?
Is that the unit cost per service?
Yes.
So total service cost divided by total number of services provided.
Right. In this case, it's a tree spraying service. So, were you guys still copying that? Anyway. So it's a tree spraying service, and they want to know this. It gave the number it gave over here was they earned 28,000 in revenues, and they sprayed a total of 35,000 feet in height. Okay, it's at the bottom of 31. So what you're going to do is you're going to take your total operating expense, because we want to know how much it cost per foot. Okay, not how much we made, but how much it cost per foot. And the total operating expense is $15,800. So we're going to take $15,800 and divide it by 35,000, and that equals 45 cents. Now, this is, I don't know how many of you know this, okay? When you're shooting for something like this, one of the things to look at is, you're going to look at operating expense divided by total number of feet in this case. But the majority of the time, it's the smaller number being divided by the larger number. And that's where you come up with your unit cost. So if you have this great big huge number and you're dividing it by a little bitty number, double check your figures and make sure that's right. I'm not saying it won't be, but make sure that's the right thing. The other side, that's also the way you calculate percentages. Okay? If I want to know what percentage was expenses for the month, right here, I'm going to start my formula. 15,800 divided by the total revenue. And then if I want to know what my net income is, 12,200 divided by total revenue. Yes, I know. You don't like that. Sum of 12 divided by 28. Now, double check yourself. You add these two figures together, and they should be 100%. Okay? So, total operating expense was 56%, and total income was 44%. I'm getting blank stares.
No, I'm okay.
Someone's got it. Okay. All right. So, and an easy way, I'm going to change this. I'm going to change the formatting to percent. Okay. So that was the second question. The third question on this was, the manager of tree doctors must keep the unit operating cost between 60 cents per foot in order to get his bonus. Did he get a bonus in January?
Mm-hmm.
Yes, he did. Because he kept the cost of 45, it had to be below 60. So what kind of system, yeah, we haven't covered this. What kind of system could the tree doctors use to integrate all its data? If you read the chapter, you briefly read about it. It's called ERP,
Oh.
okay? So, or QuickBooks will do it for you too. Especially for service industries, QuickBooks is a good format to use, okay? You go, so anyway, I didn't have an answer on that because there really are lots of good answers to that question, okay? All right, any questions about problem 123?
I do have a question about everything's in one column.
Yeah, because it's service.
So
If you divide it into two columns, that's
It doesn't
fine.
matter. Okay.
If you divide it into two columns, this is over here, these are over here, the total's over here, and the total's over here.
That's what mine looks like.
Right.
Okay.
Right. But this is what you call a simple income statement. So, okay. Okay, 25A, 24A. Preparing an income statement for merchandising companies, Now, this question was supposed to take you 45 to 55 minutes. How many of you spent longer than that on it? Okay.
But I think I got it.
How many of you were so confused you just didn't get to it? Okay. I asked that question because that's the way I went through managerial accounting. So, okay, so in 2011, Clyde Conway opens Clyde's Pets, a small retail shop selling pet supplies. On December 31st, 2011, Clyde's accounting records showed the following. Okay. He had an inventory on December 31st of $10,700, but an inventory on January 1st, the beginning of the year, of $15,300. His sales revenues were $55,000. Do you have all the answers to this? Did you get this done? Okay. All right. Utilities for the shop for the year were $3,200. The rent for the shop was $4,300. That's cheap rent. Sales commissions were $2,850. He doesn't get very good commissions.
No, he doesn't.
And the purchase of merchandise is $25,000. Those are the statistics they give us. Now, see, I don't have my notes. We're going to prepare an income statement for the merchandiser for the year end. So we always start with revenue, okay? The name of the company, it's an income statement, it's the year end, December 31st, 2011. 9 times out of 10, this is what a bank asks for. I want your year end income statement and your year end balance sheet. Okay, so we always start with sales revenues. That's the way it always starts, because you always want to start with a positive. And if that number's in if this is sales revenue, total sales revenue is negative, close your door. Okay, because you're paying money out of your pocket. Okay, so he made for the total year $55,000. Okay, then we're going to put in cost of goods sold, because this is part of the expense that takes place. Before we can figure what gross profit is, we have to know what cost of goods sold is. Okay, so sales revenue minus cost of goods sold. Okay, but we're going to start here, and then we're going to come up with a total. So he had a beginning inventory of $15,300. Then he purchased $25,000. That means the cost of goods available for sale were $40,300. We added these two figures together to get $40,300. Okay? And the ending inventory is a negative $10,700. Actually, it's not. His ending inventory is $10,700. I have a negative there to show that I subtracted it. Okay, it's not, he's not in the hole. Okay, so what we did was we add these two to come up with the total cost of goods available for $40,300, and then we add we take the ending inventory and subtract it. Okay, we subtract the ending inventory from what's available because it's not been sold. It's not, okay? It's for a total of $29,600 that was sold. Now, then to get the gross profit, you take the revenue minus the total cost of goods sold. Okay? So sales revenue minus cost of goods sold equals the gross profit. So even though he's had this cash flow of $55,000 that's gone through his account, he's really only made $25,000. And $400, yes.
Sorry, I got a little bit behind in the problem. Why is the ending inventory a negative 10,700?
Because I put the minus in there so you could see I subtracted it.
Oh, okay.
It's not negative.
Okay.
It's not a negative number. I just put
Yeah.
actually, when I put the negative in, I'll show you. It's
okay.
kind
I
of
was
cheating
just
too,
confused
because then I could just sum this. See, I could, if I put this in as a negative number, I can do this and come up with my total. If I don't put it in as a negative number, then I go sum this minus this. Okay, that's fine. So I want to ask you these questions. So we have a gross profit of $25,400, okay? But then on top of that, this is just, these expenses are just have to do strictly with the product, okay? Then we come down to operating expenses, which have to do with the operation of the store, okay? So he had utilities, rent, and sales commission. And one of the hardest things about doing any kind of accounting, financial, managerial, any kind of accounting, is understanding where things belong. Okay? Yeah. 'Cause so sometimes you just have to like picture it. Okay? Okay, so he's got a pet food store and he's got supplies, but then he's got all these shelves of supplies and he's got stuff in the back room. But then he's got other expenses that have to do with the building and the people that work there and all that good stuff. Okay? So utilities were $3,200, rent is $4,300, sales commission is $28,500, for a total of $10,350. Okay, this is his total. And see, we didn't put another line. We didn't put another line in here that said total operating expense, but you can always do that. Okay, we just moved it over. This is the total operating expense. So we know the total gross profit was $25,400 and operating expense was $10,350. So that leaves him with an operating income of $15,050. Okay. So, questions, thoughts? No.
Where do you get the gross profit again?
The gross profit is the sales revenue minus cost of goods sold.
I just don't know where I don't know where to. I don't know how to fill this in. Mine's not matching.
It's not matching. Well, you mean going back and forth between the columns?
No, I just put
Where to
it.
label, where to put each individual
Oh, okay.
versus
So,
sold versus expenses
okay, so look,
versus.
think about it this way, Rachel. We have sales revenue, which is all by its, I'll just do this. We have sales revenue, which is income. okay? Cost of goods sold is one of the expenses that the company has, all right? So you want to take your that didn't work. So you take your sales revenue minus cost of goods sold, and then gross profit. So what basically, even though there's more on this sheet, we just deal with things one at a time, okay? So when you're looking at the list that they give you, this is the list, this is, because then you're going, okay, where's the list? Okay, inventory, because they give you inventory for December and inventory for January, and you think, well, which one do I use? Your statement is for December 31st. So really what that is January 1st is your beginning inventory, December 31st is your ending inventory, okay? So the January 1st inventory is your beginning inventory right here, okay? Your December 31st inventory is your inventory right here, all right? So you have to think in timelines, which is first, which is second, even though they'll never put them in order. They just like to confuse you. The people that wrote this book are mean. Okay? And then when you look at your cost of goods sold, you want to look at how much you've bought to add to the beginning inventory to understand how much you have to sell total. Now this seems, if you're in a really high fast pace like Target, this is going to change daily, okay? But this is a little pet shop, okay? And so he just did it for the whole year. This is information he's sending out to the bank. This is the whole year, this is what happened, okay? So, where am I going? So that's where the gross profit comes from, is your sales revenue minus your cost of goods inventory, okay? But then they also top it out. You have other expenses. So this is the total of your operating expense. This is outside of the merchandise you have. So, and one of the things like might come up on this is, let's say he has big windows up front, and for 3 months out of the year he has to put up big blinds to keep the sun from coming in and making that store too hot. So he purchased blinds. That's a depreciation item, which will be depreciated off. That was a bad example. Forget I said that, okay? That was a bad example. Let's say all of a sudden he says, oh my gosh, I need stickers. I need stickers for all my cans. I need paper for people to write stuff down. So if that was the case, there would be another line item in here that would say office supplies. Oops. The undo, or office expense, office supplies. Okay? And then there would be another number in there. Let's say he spent $1,500 on, oops, not 15,000. Must have bought a desk. 150. Okay. But see, then that changes the equation all the way down. He has more expense and less profit then in the end. Okay? The operating expense is different than the cost of goods sold. Remember that. Okay? So once you take everything and add it, subtract it, you take your sales revenue minus your cost of goods sold for your gross profit, and your gross profit minus expenses, operating expenses, you come up with your operating income. So if you figure he made $14,900 for the year, he made $1,241 a month. Oh, that's worse than I made. That's not very good profit. But what happens with stores like this that do this is they have a good cash flow that goes through so they can live off the store. Okay. Okay, questions? Okay. Problem 125. So as we go on, they're going to get more difficult. So now, problem 25 says, prepare cost of goods manufactured schedule and income statement for manufactured company. So there's two things they want on this. They want a manufacturer schedule and an income statement for manufactured company. Okay? And this says it's going to take you 30 to 45 minutes. And my wager is that it takes you 3 hours to do these two things. Okay? This is why I just don't say do all 14 pages, because these problems take a while, especially as you're getting used to all of this. Okay? So, Clyde's pet succeeded so well that Clyde decided to manufacture his own brand of chewing gum, Denim Bones. At the end of December 2011, his accounting records showed the following. Okay, so we're going to talk about inventories. He has beginning and ending materials inventory. At the beginning, he has nothing in WIP, work in progress, but at the end, he has things that are in the process of being made. And then the finished goods, of course, he had nothing finished at the beginning, but then at the end of his statement, he has finished goods that are waiting to be sold. Okay? And then, because we have to do a manufactured schedule and an income statement, they're also going to give you direct materials. What's a direct material?
Something that goes directly into the cost of the part.
Correct. Something that goes directly into the cost of the product. Okay? He has plant janitorial services. What is plant janitorial services? How do we classify that?
Indirect.
What?
Indirect.
Overhead.
Right.
Because the reason it's overhead is, well, it's indirect overhead. Depends on who you're talking to. That works, okay? Sales, salary, expense. Where does that go?
It goes in overhead. Manufacturing overhead.
Goes into other. Goes into other expenses because it's sales. If it has to do with the actual manufacturing but it's not figured into the direct, it's overhead. If it has to do with the product outside the manufacturing of it, it goes into other expenses. Okay? So a salesman does not have anything to do with the manufacturing of the product, but it's not going to sell if the salesman doesn't go out and sell it. So he's an other expense. Okay? So delivery expense.
Would that be in other too?
I would like to say yes, but delivery expense would be actually direct with the product, so it would be an overhead.
So, really quickly, on page 15 is where I took my copy. Like I wrote all of this out in Excel and then took his information and posted it in. So on the salary on that particular page, where would I put that? Like if you look at page 15, on what's listed there, where would I put that salary? Because I put it under the manufacturing overhead.
But it's
But you said it's
okay.
other, so would I make a
Stop.
whole different line?
No,
Okay.
no, it doesn't belong on the manufacturing process. It's for the income statement. So we're doing two statements. We're
So
doing
we're doing income statement first?
no. I'm just going through where they belong
Oh,
to confuse you.
So some of this information may not belong on the cost of goods
Right.
list.
Because if we do the manufacturing schedule, okay, schedule of cost of goods sold, there's going to be things in this list that don't go on that schedule. And then when we get to the income statement, there's gonna be things in this list that don't belong on the income statement. This is where the difficulty comes in, is knowing where to put it,
Okay.
okay? So, delivery expense actually goes on the income statement. It's other, okay? Sales revenue, this sheet or income statement?
Would you ask sales revenue?
Yeah, okay, remember this. This is a skip, okay. Compartmentalize this, okay? This is a schedule of cost of goods manufactured. So all we're gonna talk about on this schedule is what it costs to manufacture the denim bones, okay? We're not gonna talk about sales. We're not gonna talk about maintenance. We're gonna talk about what it costs just to manufacture those bones, okay? Then on the income statement, we're gonna talk about revenue and additional expenses. This will come to play on the income statement, but you need this statement to know how much product to buy to keep your manufacturing going, okay? Utilities for the plant. Utilities for the plant are a part of manufacturing. All right? Rent of the plant, part of manufacturing. Okay? Customer service hotline expense. Manufacturing or income statement?
Income statement.
Income statement. Okay? Direct labor. Manufacturing. Because it says direct. That means it has to do with this product. Okay? So, once again, we start out, name of the company. This is a schedule of cost of goods manufactured dating year end 31. So, because it says year end December 31st, we assume that this is for the full year. Okay? For restarted and for the full year. And anybody looking at this that wanted information out of it would say that. Now, if it said month end, it would be for the month of December. Okay? Or weekend, it would be for the last week of the year. So, which is always fun. So, because he started this, our beginning work in progress inventory is 0. Okay? Because we started, we didn't have any inventory to start with. Okay? Now, oh boy, now we get started. Okay? He's, so then we start with the beginning work in progress inventory, and then we want to add the direct materials used. All these go into direct materials used. Oh, and while I'm thinking about it, next Monday we're going to meet in the computer lab.
Awesome.
I got it set up with Aaron, and that's where we're going to meet, and we're going to use computers and play with Excel.
Yeah, in the library. Where's the computer lab?
I'm sorry, where's the computer?
Down the hall here, 103. Except he said don't go in. I think it's 103, 104 is what he said.
It's just down the hall and on the right.
Right, but he said don't go in the first door
Okay.
because it's the building's shifted and the door doesn't work very well.
Okay.
So, anyway, I will be there because Aaron and I are coming over at 12:30 to get some things set up. There's no camera in there, so he's going to set up a camera for us.
Perfect.
So, direct materials used. We have beginning materials inventory plus anything that's purchased. Okay? And then, so for the full year, we had a total of $52,900 of materials available. So, beginning materials plus the purchase of direct materials, here's my equal sign, for available for use is 52,900. I cheated on that. Okay? At the end of the year, there's $10,500 worth of materials left. So this minus, it's the same thing as before. The minus doesn't belong there. It's not a negative number. I put it in there just to confuse you. No. And so the total direct materials used was $42,400. That's 52.9 minus 10.5. Okay. Now we had nothing to start with, so we have $42,400 worth of materials that we used, and our direct labor, the labor that was paid out to make the dog bones, was $24,000. Okay. I hate the auto colors they have set up, in case you haven't figured that out. Okay, so we have the expense of the direct materials, the expense of the direct labor, and then we have manufacturing overhead. Okay, so manufacturing overheads, the rent on the plant, the utilities for the plant, and the janitorial service for the plant. Why isn't the janitorial service in direct labor?
Because it's not directly related to the product.
Right. If we had to say the labor cost us this much per item figured out, we don't want the janitorial service in there. It has to be directly assigned. So your plant janitorial services will be linked to manufacturing overhead. So total manufacturing overhead is going to be not that color. $15,700. Okay. So we have direct materials used, we have the direct labor, and we have manufacturing overhead, which makes a total manufacturing cost of $82,100. Wow. His dog bones are doing a lot better than his dog food merchandising. Okay. That let me look. So if we're the total cost of manufacturing is $82,100, and then we still have work in progress. We have inventory that's being made but not finished, and that totals $3,500, and that's not a negative number. I just put the minus in there so you can see I'm subtracting it. Okay, so the total cost of manufactured goods is $78,600. Everybody got that? Okay. Yay! All right. Now the second part of this is the income statement. Okay. We start out at the top the same way, except this is an income statement instead of a manufacturing statement. Okay? So the sales revenue is $108,000 for the year. It's pretty good. Okay? Here again we have cost of goods. We have beginning cost of goods plus the cost of goods manufactured. And that gives us cost of goods available for sale. These are completely finished. We can sell $78,600 worth of goods. They're done. They're on the shelf. They're ready to be packaged and shipped out. So, but, oh wait, we still have, that's what we ship. This was available for sale, but this is what's still in inventory at the end of the year, is the $5,200. Okay? Did I lose anybody there? Okay. So we take this cost of goods available minus the finished goods to get $73,400 for the total cost of goods sold. All right? So the gross profit is $108,000 minus $73,400 for a gross profit of $34,600. Got it? Okay, but then, that's the income statement. You don't have it yet.
I'm just trying to think of my formulas as I'm going to type in, and I'm just not
Right.
quick yet.
Sales revenue minus cost of goods sold equals gross profit. Minus operating expenses, which equals 8,200. And that will equal operating income. I am going to put these up. When I go back to the office, I'll put these up on, because I have 5 minutes. I'm going to go through the rest of this problem. The next problem's really hairy. I'm just going to talk through it, basically. Okay? Well, okay. So, the third question on this, 25, the third thing they ask for is, how does the format of an income statement for Dim & Bones differ from the income statement of the merchandiser? It's just kind of a, after you've done all those numbers, it's just kind of a question out there to make you think besides something beside the numbers. Okay? Dim & Bones cost of goods is based on, goods sold is based on the cost of goods manufactured. Okay? But, I'm sorry, it's Dim & Bones compared to Pete's Pets. Okay, Clyde's Pets, I mean. The cost of goods sold is based on a merchandising purchase. So you're talking, the pet food store is a merchandiser, Dim & Bones is a manufacturer. That's all they're running. Okay? And the unit cost for Dim & Bones, he manufactured 17,400 units of products in 2011. Compute the company unit cost. So basically, if we go back and look at this, which these numbers don't agree. It's the unit product cost will equal cost of goods manufactured divided by total units produced. Cost of goods manufactured. Go back to this, that's why it doesn't agree. Cost of goods manufactured is 78.6 divided by the total number, which was 17.4, equals $4.52 per unit. Okay? We could go back and also figure what he sold them for. But we're not going to do that. Okay? I've got 26, and I've got an extra worksheet in there. 27, I'll show you the finished product. This is what 27 looks like. And I want you to kind of see this, because what happens is you start with your direct materials inventory and you work through your formulas. These are in millions. In millions. Instead of putting a little M behind it, I just put in millions up here at the top. So you had 0.9 million. What is 0.9 million? How much is that?
900,000.
900,000, okay? Plus 2 million in purchases. His direct materials available for use was 2.9. His ending inventory was 0.6, so his direct materials used was 2.3, okay? Now, you'll notice direct materials used is in this next, so this goes up here, okay? In the work in process inventory, direct materials used is 2.3. You go through this, cost of goods manufactured is 25.3. That's what starts the finished goods inventory. This is a flow of manufacturing, okay? So, we didn't go through all of these. I will put these in, and I'll get the formula sheet, and I'm just going to put everything in Canvas, and I promise that we'll get there this week. Okay? You're dismissed.
And then you want us to just email you whatever we did get accomplished?
Yes.
Okay.
Email me what you got accomplished. What I want to do, we're going to Monday, we're going to work on, we're gonna be in Excel. So Wednesday, I'm gonna start chapter 2. Okay?
So read chapter 2 before Wednesday.
So read chapter 2 before next Wednesday.
Thanks. I always have it left off.